All right. What is up? And welcome back to How to Invest in Commercial Real Estate. Still undisputed best podcast in Jinx, Oklahoma.
What's going on?
I need to start the second best podcast in Jinx, Oklahoma.
What would you talk about? There you go. See, when you find a topic, we'll discuss it. Otherwise, shut up.
So good.
We just got back from ICSC.
Yeah, we did.
That's what's up.
Vegas.
For those that are not familiar, ICSC, it stands for International Council of Shopping Centers. But in general, it's probably the biggest commercial real estate convention, at least in the U.S., most likely, and maybe the world. I don't know. It's big.
It's huge.
And, you know, there's a separate focused multifamily convention. So this really deals with everything that's not multifamily, although some of the same equity players and brokers are involved, but mainly retail and retail tenants, industrial, big equity, that kind of thing.
Yeah, all the retailers are looking there. I mean, if they're expanding, they're looking for stores. Developers are looking for tenants. It's kind of speed dating for retail. A ton of fun. You can see who's out and growing and doing well in the marketplace, writing offers. And obviously you could see who's not. You know, Learning Experience sponsored the whole freaking conference. They're begging for developers, it looks like. Wonder how much that cost.
I didn't see that.
The whole conference, dude.
Man.
That and like Jersey Mike's, I think.
Jersey Mike's I saw. They must be expanding
in their franchise concept. So anyway, a lot of deals being plugged. I mean, last year we drummed up 6 months worth of deal flow. Andy and Jackson met several people that we got into partnerships with. I'm similar connection. I know Andy went out and toured some sites with the VAC group that we did a joint venture with. So we're looking at doing a few more deals with them. They fly back out and tour those.
You know, one of the takeaways that I had from a few of the meetings that we set up with debt and equity groups was this idea that, hey, we can help you arrange equity. We have access to these equity groups. And, you know, I tell them a couple about our deals and they're like, yeah, you know, we really, if it's not over 5 million and even 10 million, like they're not interested. Yeah. And that is really a tough thing for some guys from Oklahoma to appreciate, because I didn't come from any money connections. I mean, it's tough to get someone to invest or loan $25,000. Yeah. And so then you got these groups that says, yeah, we love real estate, but we only want to give you $10 million. We don't want to give you $2 million.
Yeah, that's going to be hard for us. And I mean, that's a huge shopping center, right? Where the equity portion is $10 million.
$30-40 million. Yeah, for sure. And then you look at that deal Andy sent over, right? The Israeli bond market. Yeah. It was this pitch deck, and they're like, yeah, we'll go and create and issue this bond up to $200 million in Israel, and they'll invest. And I mean, it was a really favorable return, but some of the requirements on there were just insane. You know, but you got to have a really big portfolio as a sponsor to have some of those options available to you. And really, that's how everything used to be back in the day before crowdfunding was legal. That was it.
Yeah. Another takeaway I think we had was that the market is reasonably bullish in retail. And it may not have been several years ago, but both multifamily and retail starts, new developments have been plummeting over the last year. And for retail, it's been longer than that. And so what big institutional groups are expecting is that demand is going to be high and rents are going to be going up because there's been so much less new product coming on the market. And so I think we're in a good position to be acquiring assets, cash flowing today, knowing that we potentially are going to have above average rent growth over the next few years.
Yeah, and you kind of saw it in COVID, right? Where all the multifamily groups were buying the 4 caps on in-place stuff. I mean, just stupid prices. And the only way they made it work, obviously, is underwriting ridiculous rent growth year after year after year. You can underwrite 10% rent growth. So you said something like, institutions are getting bullish back into the market. And I think it fits with the same thesis we have in our retail stuff. Acquiring good cash flowing shopping centers now at a good basis, good buy. But rent is so under market that you should be able to get, I mean, it's going to sound insane, but you should be able to get maybe 10% annual increase on that top rental revenue number.
Yeah, and if you're a traditional commercial real estate person, building in 10% to the model is crazy. But follow me on this. Like we've done this with properties. Let's say we have a property that's got $10 or $11 rents for a smaller space, and then we think market is $15. Right? That's not. I mean, that has happened to us many times. And so, how do I go from 10 or 11 to 15? I mean, I could try to blow them into a 50% rent increase, but I also could just do 10% a year over the next 3 or 4 years. And now that gets me up to $14 or $15. So I know that it's not normal to underwrite 10% rent growth in a year, but given the right properties that are under market on rent, you can absolutely do it, at least in the short term for a few years.
Yeah, and you kind of know that, right? Because we are still developing new retail properties, and those retailers that need and want this space, they're paying $40 a foot, right? So like, I can have a tenant over here slinging burgers, paying $40 a foot. You're at 10. Like, if you're not profitable, that's not a me problem. That's a you problem.
That's a your business problem.
100%.
Yeah.
100%. So being able to go in there and sometimes it's just saying, hey, like, let me help you with the new sign package, or let's make sure these windows are cleaned, or anything, to help really start jacking up those rents.
Well, we're going to move to the main topic then.
Yeah, I think so. Any updates, Braden? Let's see. We closed on Laburnum last week. That was successfully closed.
Yeah, super excited about that. Gave us something to celebrate in Vegas. Woo!
Yeah,
it's exciting, man.
It was exciting. I mean, the idea that we're closing, $9 million deal, almost every month now, $8 million deal is really, really exciting. Because when I started, the thought of buying one house every 6 months that cost me $50,000, that was a big deal. And then it was, hey, how do I buy $2 million apartment complex a year to add to the portfolio? Now, you talk about adding $8, $9, $10 million a month to the portfolio. That's kind of where we've come with the partnerships with our investors, lenders, and other equity groups, and it's pretty exciting.
Yeah, that was another deal with Maybury Bank. I think it was like a 2.8, almost $2.9 million equity raise, had dozens of brand new investors, which we're always super excited about. We still have leads coming in from the latest Facebook ad that we turned off, which is kind of exciting. Really, really busy. And then next month, so we closed on that in May. Next month, we're closing the Texas portfolio at the end of June. I think that's a $15 million acquisition between the 3 properties. And then a month after that, in July, we're closing the deal in Fort Worth.
Are we already fundraising for the portfolio? Is that launched yet?
I think it's up on the website. It's not launched.
Okay.
So if you're sneaky and you're on the website, you can get an early commitment in for
seems
sure.
like I saw a couple early commitments come through.
Same thing with Fort Worth.
Yeah.
But yeah, June, July, those deals. And then a couple more developments in the pipeline, some multi-tenant strip centers in smaller markets in Texas, similar to the Aspen Dental deal.
Good.
I think that's it. Yeah.
Well, I think so. One of the things we discussed going through the topic at ICSC was, you had some meetings with some potential tenants, and they're going into some big box areas where we had some tenants go through bankruptcy, right? And for some reason, they always seem like they're big box areas, right? Like, I mean, I guess it's okay to say it's well known. Joann's.
Yep.
They're big.
Spoiler, Brian.
Did you guys know about that?
No,
we had a
kidding.
couple of
Everyone
Joann
knows.
locations.
Yeah. Hooters is in a big box. They're in bankruptcy.
Now doing it.
Well, American Freight.
Party City, American Freight.
And so we want to talk about what does that look like for real estate owners, in case some of you guys are in deals that have tenants with bankruptcies, how to navigate through a tenant filing bankruptcy in a retail space that you own, manage, or are a part of.
So I think we have to go through defining what it is. It's Chapter 11, if I'm not mistaken, and it's a business corporate bankruptcy, right? So like, let's just explain the process of why a corporate tenant business would go through this Chapter 11 bankruptcy, and what the timelines and process looks like, what maybe the end goal is.
Yeah, I mean, we're not going to be experts on this, guys.
I expect you to be an expert.
We're literally just talking from a perspective of a landlord having gone through this a few times. But my understanding is that it's usually a corporate restructuring. They're not wanting to end the business. They're saying, hey, we're not profitable, whether it's due to sales, whether it's due to poor locations, whether it's due to burdensome debt that we've taken on over the years.
Yep.
We need to restructure all of this so we can come out profitable with a plan to grow. And so that's what we're seeing. And I'm going to bring up Hooters as an example, because we're dealing with that right now, is that they're going through a corporate restructure. And how this thing works is they file, and then let's say they have 200 locations, and they say, okay, 50 locations are just losing money hand over fist.
Going to shut them down.
Yeah, we're just going to shut them down.
No chance.
And they say to the court, we're going to just reject those leases. And those are the landlords that are going to be hurt.
Hosed.
Because there's just no recourse for them.
No credit, no guarantee.
They're not going to get back rent if they are behind in rent, and they're not going to honor the lease. You basically just chalk it up to a vacancy, and you need to relet the space. But more likely, I think usually half or 2/3 of the better performing stores, they work to restructure. And so then what they do is they try to line up either a new buyer to come in to assume those locations that maybe can operate it better, or maybe they go and restructure the debt with whoever has the paper on the company, and they say, hey, our interest rate's 8% on a 20-year AM, and we need to restructure down to 5%, or we need to get a longer AM, or however they do it.
Or we borrowed $500 million. We actually need you to cut that in half. We'll only pay back $250 million.
Yeah, and then the debtor has an option, right? They can say, no, we're not doing that. We want the locations. We want the business assets.
Yep.
Or they can say, no, we'll help you. We don't know what we're doing in that space. We want to emerge out of this and try to get some of our money back. So, when you get hit up with a tenant and they've decided not to close your location.
Oh, Red Lobster. That was another big one. Oh, yeah. Massive bankruptcy.
Yeah, I read a huge article on that.
So did I. It is
private equity came in and jacked it all up.
They bought it and then they're like, only buy my shrimp. You need to sell more shrimp.
Yeah.
Anyway, it was just a play to sell. Anyway.
But if they come to you and they're saying they're making an offer, that means that you're on the list of potential stores that you're going to keep. They're going to try to keep open.
Yep.
Back when
as the landlord, when you get an offer, meaning, hey, this store isn't losing money hand over fist, but we still are requesting a 30% rent reduction or whatever it is. That's the offer that Joel's referring to.
Yes, and I'll give you an example because we love to talk about real life experiences. I had a mattress firm, and they went through bankruptcy several years ago. And
that was a good story.
Yeah, and what my location, they come and they say, hey, we need a 30% reduction in rent and some free rent. Otherwise, we're going to have to close the store. Well, apparently another broker in the Little Rock area got a hold of this sheet of all the mattress firms and what they pay.
No, we got sent the wrong letter. So I look at this and it's the wrong address and you're like, hey, they're paying more than they're paying me. So when we got the correct letter, our letter, we were like, no, down the street, you're paying so-and-so $30. We just saw that letter.
Yeah, that's
13's
right.
A deal. No.
They were paying us like $13, $15 a foot.
Yeah.
And then these other locations in the same market, not better locations, and they were paying $25 a foot, $30 a foot. And so they were requesting them to come down to $20 a foot. Mm-hmm. Big discount. But yeah, they're asking me to go down to 10 or whatever it was. And so, we tried to play the logic game and said, okay, are they really going to close this really good location over $13, $14 rent when they're offering to keep these other stores open at $20 a foot in rent? And we made the gamble that they weren't going to do that. And so we just told them, no, we're just going to keep it the same. You guys decide if you want to stay open or not. Otherwise, we got other tenants ready for that space. And that worked for us. They didn't get a discount. They stayed in the space, and they're still open in that space today.
Well, they're going to use their bankruptcy story to negotiate every single lease, right? Even if a store is just absolutely killing it, they're somehow, no, we're thinking about closing this store. We need to cut and...
Yeah, we looked up the Hooters that we have. We looked up on Placer data, and we're top 25% in traffic of all Hooters in the nation. And so our logic is kind of...
And we know for a fact it's a profitable store.
Yeah, maybe not hugely profitable, but profitable. And so we have to reason... Okay, out of 100 stores, we're top 25. I mean, obviously they have a few more than that, but so they shut down the bottom third. And so then who are they going to actually really consider shutting down if they don't get a deal? It's probably, the 50 percentile, the 40 percentile, the 50 percentile, right? Not the top 25 percentile.
Yeah. Also best one in the state, if that matters in like a geographic sense of like needing... I don't know. Maybe it doesn't matter.
Yeah. So we're going through that right now. That is not finalized or decided, and we're not going to talk specifics about the negotiations. Yeah. But it's just to let you know that's how this process works. They cut the bottom stores. If they're talking to you, it means your store is being considered as one to keep open. Any information you can get on where you rank with the other stores will give you leverage in that negotiation. Obviously, if you're... Let's say you're the 40th percentile, meaning 60% of the stores are better than you, and they've already cut the bottom, 25 or 30%. Well, now you're on a sliver that they're probably borderline going to keep open unless they can get you to give a concession. So.
And they want to keep some stores open, right? They're not wanting to close everything down. So you got to remember that they're not just going to close every single store.
Right.
It's a different conversation.
Yeah.
So anyway, those are some of the things you can think about when a big retailer goes through a bankruptcy. Now, obviously, if you have a single location operator of a business that goes through bankruptcy, well, you're hosed. And depending on how much cash you have or how much cash they have or you think they have, you may not even want to file to go after them because it's not worth the money and the time. And if you don't have a personal guarantee anyway, then it won't matter because that entity won't have anything left to go after. So we're only talking about multiple location corporate bankruptcies.
I think for the most part, even some of the other people I've talked to that own big box space, it's not a massive looming fear that we have because most recently it's been an opportunity for us to re-tenant some of these historic low rents, and Joann's will have 4 or 5 year options. So when you buy something, it's really hard to affect change in the rent growth on some of these leases just because they have so many options. We've talked about this before. Them going through bankruptcy is an amazing opportunity for you to re-tenant that space at potentially a lot more rent. And we've seen several examples in Slidell, Louisiana. I know you've got some deals going on another deal.
Yeah, we had a Joann's. They filed bankruptcy. They were at like $11 a foot on a pretty decent size.
So not super cheap. I mean, 11's
not super cheap. But we knew we were in a good location, and as soon as we didn't have to put it on the market. People found Joann's locations because they knew that they were filing bankruptcy, and they started calling us and saying, "Hey, I heard Joann's is going out. We'd love to backfill that space because, right now, like we've talked about, there's not a huge supply of junior box retail for these people that want to expand into markets. So it's been a good thing. We're going to actually get higher rent coming out of this Joann's bankruptcy than we had with Joann, and the investors are going to benefit from it.
Nice. I'd say more bankruptcies are coming. Definitely. Yeah. It's happening.
And there'll be more restructuring.
There'll be more new concepts.
There'll be more new concepts. It's always going to be a cycle, so it's not necessarily something to fear. And
the Party City in Owasso, the city I live in, it's getting backfilled with a boot barn. I'm ecstatic. Never went to Party City. I'll probably never go to Boot Barn.
Never been to Boot Barn.
Sounds better than a Party City. I don't know, man.
I don't know. What do they sell? Like jeans and boots and.
I swear to God, did you just ask what Boot Barn sells?
Yeah.
Do you know what Party City sells?
Yeah, party supplies.
Hey.
But I'm wondering if they sell anything other than boots. Like I've never been in a boot barn.
Probably.
I'm assuming it's like Western wear and boots.
Dude, you go into Party City, you can get a shopping cart full of shit, and there's no way you're spending more than $20.
Well, they should charge more and stay open. I'm just saying.
Yeah, they obviously didn't figure out that business model.
Well, we'll wrap it up with this, guys. This is not a kind of an overarching theme, but we want to always encourage you, get in the game. And, what is holding you back from getting in the game? And I want to encourage you guys to set your goals. Set your goals on when you want to retire. Set your goals on what that passive income number looks like. Set your goals on get invested in a deal by next year or in 2 years or in 5 years. But not setting any goals, you are going to be apathetic and you're not going to take action, and you're going to be in the same position that you were in today, 5 years from now, or 10 years from now, and you just let life happen to you. So decide what it is you want, decide how much money you want, decide when you want to retire, and then just start taking steps. And we want to be here to help you if commercial real estate is a choice for you.
I think take baby steps towards seizing the opportunity. I think a lot of people listening or watching or going through market shifts right now can feel that they want to be taking a part of this opportunity of the crazy inflationary environment. Let's buy assets. Let's increase rent. I know it's possible. Everything is getting expensive around me. If I could just buy something, I know I could take advantage of that. It could almost be anything that you can rent out. You know what I mean? Like a storage unit, a land, a retail center, a house. Like, do whatever you're actually able to do, but don't do nothing, right? It could be buying a duplex, and that's how you're able to take advantage of this market cycle and increase some rent, but do something.
Yeah.
It just gives you a little confidence to increase it next time and do more.
Yeah, and momentum builds for sure.
Exactly.
So,
well, I think that is it for today's show. We will catch you next time on how to invest in commercial real estate.
Thanks.
All right.